Good afternoon. Thank you for joining us today. This presentation today features Seabridge Gold. And although some of you may be wondering why a gold company is presenting at our Battery Metals Conference, Rudi is going to go through just what a wonderful copper endowment at his flagship project that Seabridge Gold boasts, and what a great opportunity going forward to have one of the premier copper gold porphyry deposits in production. So without further ado, Rudi, I'll let you take it from here.
Thank you, Bruce. And you're absolutely right. We've been known for 20 plus years as the go-to gold stock, but I think people have forgotten that along the way, we've also amassed a huge quantity of copper in terms of reserves and resources. Just a reminder that I will be making forward-looking statements during today's presentation. So if you look at the case for Seabridge today, in terms of gold, unparalleled leverage to the gold price. But in addition to that, I think what is lost on the market is the leverage that we actually provide in terms of copper, which hopefully I can bring out during today's presentation. And that leverage comes from owning 100% of the world's largest undeveloped gold and copper project in northwestern British Columbia called KSM, that hosts proven and probable gold reserves of 39 million ounces of gold and over 10 billion pounds of copper. In addition to KSM, we also a few years ago purchased another project called Iskut, which we're now exploring for large copper gold porphyry deposits as well, and see a lot of similarities there to what we have at KSM. When we formed the company in 1999, we tried to eliminate and minimize political risk, and we do so by having all of our projects either located in Western Canada or the Western United States, where expropriations tend not to happen. We formed the company in October of 1999 when gold was trading at about $260 an ounce, with the belief that it would go substantially higher, which obviously it has. And our business strategy was quite simply to grow our ounces in the ground faster than the shares outstanding, with the thought being that the more gold we can provide on a per share basis, the better leverage our shareholders should have to a rising gold price. And if you look at by the end of 2020, with about 75 million shares outstanding, each one of our shares was backed by over 2 ounces of gold in the ground in either terms of reserves or resources. And what that translated into was the largest endowment on a per share basis, either in terms of gold reserves or gold resources. Our shares are backed by 5 to 20 times more gold in the ground per share than any other company on the planet. And as a result, we delivered the optionality to the gold price that we were expecting, with our share price going substantially higher compared to the gold price or other gold equities. But along the way, we found a lot of copper. KSM is the project that just keeps on giving and giving and giving. If you look at us today in terms of our copper resources and copper reserves, and track us against some of the larger copper companies or some of the gold companies that also produce copper as a byproduct credit, you can see that in addition to our outperformance in gold metrics per share, we provide a lot more copper per share than even the world's largest copper companies. In fact, each one of our shares is backed by over 600 pounds of copper in situ in the ground per share. So at today's copper price, it means that if you buy a share of Seabridge, not only do you get 2 ounces of gold value, which is today is about $3,600 a share, but you also get almost $2,500 in copper in the ground per share as well. And why is that important? Well, we believe that we are now in the beginning stages of a copper supercycle. The demand for copper is growing rapidly as a result of the green energy initiatives that are being put around the world for electric powered vehicles, solar panels, wind turbines, and other green energy initiatives. The fact is that our industry today is already in deficit, not producing enough metal. And it's more difficult to get mines permitted and approved today to provide more metal that's going to be needed for demand. So we've seen a couple of super cycles in the past. We think that the one that's about to be on us now will be the best yet. And why is that? If you look at some of the studies that have been done in the industry by some of the recognized people that follow the supply and demand fundamentals for copper, you can see that in deficit already, and that deficit is expected to grow substantially over the next several years. In fact, by the year 2030, the cumulative deficit between now and then will approach 30 million metric tons of copper. And in the year 2030 alone, it's estimated to be above 6 million tons of copper in that year alone. Goldman Sachs has also come up with their own estimates on this, and they're forecasting a deficit in the year 2030 of 8 million metric tons. And why is that? Well, as demand continues to increase because of green energy initiatives, new mines are not getting built and expansions that are supposed to happen are not getting done. The difficulty we face today in the industry is to get projects permitted. It always strikes me as odd that the same groups that are opposing mines are the same groups that want green energy initiatives. You can't have both. To meet demand that's coming from green energy initiatives, we're going to need new mine supply, and that mine supply is not coming anytime fast. And by the way, these deficits that are forecasted also include a number of new projects that are expected to come into production between now and then, which is still a question in my mind whether they will happen or not. Our copper today comes from our KSM project, which is located in northwestern British Columbia, a project we acquired from Placer Dome in the year 2000. A project that when we acquired the project had about 3 billion pounds of copper and 2 million ounces of gold. Today, KSM has grown into the world's largest undeveloped gold copper project, measured by either reserves or resources. And is situated in the middle of the Golden Triangle, where all of a sudden there's a lot of interest being shown by the major, not only the major copper companies, but the major gold companies looking for copper exposure as well. We're in close proximity to Galore Creek, a joint venture between Newmont and Teck, in close proximity to Red Chris, a project that Newcrest bought into a couple of years ago, and pretty close to GT Gold, a project that Newmont bought by buying the company for their gold and copper deposit. We've now invested over $400 million into KSM. We've gone through the environmental assessment process. We have approvals in place to start construction. And to get to where we are today, we've also achieved the approvals and support of the local indigenous groups with impact benefit agreements fully executed with the Niska Nation and the Tahltan Nation. Another big advantage that we have over other undeveloped projects around the world is cheap power, existing roads, and port facilities. All of these investments were made with other people's money. Along Highway 37, which is now a year-round maintained highway just to the east of KSM, the government has extended the power grid, bringing cheap hydropower to the district. We've now secured 250 megawatts of power through contractual agreements with BC Hydro that will allow us to bring power into KSM at about 5 cents US per kilowatt hour, some of the cheapest power in the world. And then last but not least, just to the south of us in the town of Stewart, we have an upgraded port facility and a brand new one that's been built that will allow us to bring supplies in on an annual basis and also take concentrate out to smelters on the Pacific Rim. At KSM, we are blessed with 5 unique deposits, each of which have varying levels of gold versus copper. We've concentrated our activities to date on the 4 deposits we owned up until last December, namely Iron Cap, Mitchell, Sulphurets, and Kerr. And in December last year, we bought a 5th deposit from our next door neighbor called Snowfield from Pretium. Collectively, we now have 9.8 billion tons of economic resources at KSM that are constrained by either open pit shapes or block cave shapes, which collectively give us 142 million ounces of gold in the ground and over 50 billion pounds of copper. As we've gone through the process here, the environmental approval process, we are now permitted for a tailings facility of about 2.3 to 2.4 billion tons. So even though we have 9.8 billion tons, we've been focusing on what are the different mine plans that we can bring forward to drive the best economics. We finished a pre-feasibility study in 2012 that was used to get our permits. We received our permits in 2014. And in 2016, we updated that study and then reconfirmed the economics last year. In that updated study, the 2.3 billion tons that are being mined captured 39 million ounces of gold in reserves and over 10 billion pounds of copper, yielding a project that had an all-in cost of production using low metal prices, $1,230 gold and $275 copper, an all-in cost of production of about $670 an ounce, taking copper as a byproduct credit. What that mine plan did not yet include, however, are the 2 higher grade copper zones we've added subsequent to 2012, namely Deep Kerr and Lower Iron Cap. At Lower Iron Cap and Deep Kerr, we've added another 30 billion pounds of copper that can now be factored into mine plans. We did an alternative mine plan last year, focusing on the higher grade copper zones at Iron Cap and Deep Kerr. And that updated mine plan still captured 40 million ounces of gold, so no loss in the gold content. But instead of 10 billion pounds of copper that we have in our pre-feasibility study, this new mine plan captured about 19 billion pounds of copper for the same throughput. And as you would expect, the additional 9 billion pounds of copper has a big positive impact on the project's economics. Using the same metal prices we used in our base case in the pre-fees, the all-in cost of production dropped from $670 an ounce down to zero, meaning that the additional copper offset all of the operating costs at the project, all of the capital costs, and all of the closure costs. This is an interesting project that from a copper company's perspective, if you look at it and take gold as a byproduct credit, you can produce copper for negative costs. As a gold company that would take copper as a byproduct credit, you can produce gold at negative costs. This truly remains the best, in our view, undeveloped gold copper project in the world today. We now have a second project that we believe can yield additional material in copper. That's the Iskut property located in northern British Columbia, about 30 kilometers as the crow flies from KSM. At Iskut, we already have a known small deposit called Bronson Slope that gives us just over 2 million ounces of gold and about 500 million pounds of copper. But more important to us is we believe we have another big gold copper porphyry district here, similar to KSM, that has the same structural elements, the same rocks, and the same age of mineralization. Last year, we started our first program looking for copper and gold. We did hit zones of interest, intersecting good intervals of gold and copper mineralization. We will be following this up with a program this year, and hopefully to get into the heart of the system to start to bring more resources to us in terms of gold and copper. And let's not forget that it took us 15 years to unravel KSM from the time we did our first exploration to where we are today, and we're just getting started at Iskut. So the reasons I think that are pretty clear in terms of why Seabridge might make sense as an investment today is we have a 22-year track record of showing significant outperformance because of our gold. Copper is now in the beginning period, we believe, of a bull market in copper going forward, and the market has not yet caught on to the amount of copper we have and the leverage that we provide to the copper price. And then also, obviously, is KSM itself. The big companies need new projects. There needs to be new copper projects built. We believe that the larger copper companies will focus on projects of scale with good capital efficiencies and projects that actually are permitted or can be permitted. KSM checks all those boxes. We expect to have a joint venture done at KSM over the next 12 months or less, bringing in a large partner that has the technical, financial, and social wherewithal to build and operate a mine the scale of KSM. And then just to wrap things up before Q&A, we are dual listed. We're a Canadian company, although most of our volume trades on the New York Stock Exchange. We're part of a few important indices in Canada and the United States. And one last thing I'll point out is that this is a company that has strong insider ownership. Insiders of the company, including co-founders, management, our board, officers, control over 30% of the shares of this company. And you'd be hard-pressed to find another company with that strong insider ownership with a company of our scale. So Bruce, happy to answer any questions that may come up here.
Thanks, Rudi. Wanted to kick it off with just one of my own. Rudi, knowing the Seabridge story well and knowing your flagship asset, KSM, is very close at current commodity prices to a 50-50 economic deposit between copper and gold. The question I've got for you is, do you think it's going to be developed as a base metal or a copper story, or do you think it's going to be developed as a gold story these days? It seems even some of the gold companies today, they're not shunning away from letting the world know that they're big copper producers as well. But I'm just wondering which way you think that it might go.
Well, you know, it's interesting, Bruce. Even when the big copper companies come and look at this opportunity, they see right away that the best way to recoup capital early on is by mining the Mitchell deposit first. which has essentially a very, very low strip ratio, right near surface, closest to planned infrastructure, and yields the best economics for the first 3 or 4 years, which is the time period to recapture capital. At that point forward, you can then switch to either a copper-driven project or a gold-driven project. And I think it's a function of, will a partnership be a gold company, perhaps even a syndicate of gold companies, or will it be a single copper company that's really in it more for the copper? One thing that I've learned in my career is flexibility is really important to attract attention. I've never seen in my 40 years in the business a project that provides the flexibility in mining that KSM does, because of having 5 deposits, all of them that daylight at the surface, and each of them providing different levels of gold versus copper. So if a copper company wants to go after the copper, they can focus Ironcap and Kerr after they get their capital recoupment from Mitchell. If a gold company wants to come in and focus on gold, they will continue at Mitchell and probably move on to Snowfield and Sulphurettes. But the optionality and the flexibility that KSM provides, in my view, is second to none in the world today.
Thanks, Rudi. Rudi, one other thing I just wanted to mention before I take some of the other questions is there are a lot of copper gold porphyries up in the BC area. Do you want to just talk distinctly about both from an infrastructure, a native relations, and a stage to eventual production? The big, one of the can you just highlight some of the things that really make your KSM project stand out?
Well, I think the biggest is just our scale. Nothing comes close to us. Even Red Chris or Galore Creek or Shaft Creek, they're 1/5 to 1/10 the size of KSM in terms of known mineralization, in terms of reserves and resources. So we can put forward a project that has a 50-year mine life today, and we're only capturing about 25% of the resources we have available to us. Where these other projects that may be on the drawing board, Galore Creek, Tatoga, or Red Chris, have a much shorter mine life than we do. And I think multi-generational projects are definitely more interesting to the big companies than projects that may have a mine life of 10 to 20 years or even less. And second, I think, is proximity to infrastructure. A lot of these other projects to the north have a lot more challenge in terms of infrastructure, getting access into their site, whereas we're pretty close to Highway 37 and the largest porphyry down to the south to get to Smithers. Sorry, not to Smithers, to Stewart, where the ports are. And then I think it's also the time for permitting. I mean, I think we can all agree that it's getting more challenging to get projects permitted. We started the environmental assessment process in 2008 and did not get our approvals till late 2014. That was 6 years. I would say in today's world, you'd be lucky to even come close to that kind of a timeline. And none of these projects are even on the drawing boards yet, with the exception of perhaps Red Chris on an expansion, to get to a point where you can see first production there.
Thanks, Rudi. Question here: Do you envision selling KSM outright or a partnership of some sort?
Our goal remains a partnership. We believe that we drive more value to our shareholders having a meaningful interest in the project than perhaps selling the company today at today's share price plus a market premium. If you look at KSM at today's metal prices, the first 5+ years of production, mostly coming from Mitchell, generates over $2 billion of cash flow a year, free cash flow. If we have 30 or 40% of that cash flow, that would give us cash back to Seabridge of $600 to $800 million per annum. Apply a multiple to that. That type of valuation far exceeds what you probably could get in terms of an outright sale of the company or an outright sale of the asset. A sale of the asset on its own doesn't make a lot of sense because it creates huge tax liabilities at the corporate level.
Another question on Iskut, even though it's lesser developed or not as well known as KSM, can you speak a little bit to the split in resources between gold and copper percentage?
Yeah. Right now it's more weighted towards gold. However, what we were seeing, last year in terms of the drilling, we had something that's still far outside what we think is the heart of the system, where we intersected a 0.62 copper over not a huge width, but a meaningful width, and then a longer run of 0.16 copper and 0.16 gold, which is more weighted to copper. I look at these things in terms of metal value per ton, whether that value comes from gold or whether it comes from copper. It's the total value per ton that's important to me.
Terrific. And well, that's all the questions I had on my line, Rudi. And I think we're right near the end of the session.
Well, Bruce, thanks again for the opportunity of presenting. It's the first time we ever presented at a at a non-gold conference, so a unique experience for me. And I thank everybody that took the time to listen. If you have any follow-up questions, don't hesitate to reach out to me. My email is Rudi, R-U-D-I, @seabridgegold.com. Thanks again.
And our pleasure, Rudi. And it was really nice to see the absolute amount of leverage on the copper front, because I'd never seen that in a presentation before from you. And it was nice just to see how much copper you've got per share as well. That's a lot of leverage.
It sure is.